Hi, I'm Frank Ahrens, economics blogger with the Washington Post, and today is tax day. So let's use this opportunity to talk about something called a flat tax. You may have heard about it in the news recently. You may have heard sort of whispers about it for years and years. Let's talk about what it is and how it's different from what we have now. So let's diagram it and take a look here and say this was all the money you made last year. This is your total revenue. It wasn't a very good year. So here's the way the tax system works now. Income tax takes a little corner there. Payroll tax takes a little bit there. A little chunk comes out here. Maybe that's inheritance tax. A little capital gains over here. Because the code is so complicated and kind of messy, taxes are hard. And a lot of people want to simplify them. One way to simplify them is go to a flat tax. Let's say this is all the money you made last year. Here's how flat tax works. You set one rate, let's say 17%. This part goes to the government. This part you get to keep. It's simple, but it's also controversial. What it comes down to is, what do you think is more fair? Is it more fair that rich people are taxed at a higher rate than poor people, which is the system we have now, or is it more fair that everyone is taxed at the same rate regardless of what they make, which is what a flat tax is like? Now, there have been a few steady advocates of the flat tax through the years, such as Steve Forbes, who ran for president a few years back, and the Libertarian Cato Institute. But recently, the flat tax has gotten a little more momentum, or at least a little more hype, because it's one of the things that the Tea Party favors. So it's going to be in the news a little bit more going forward. I'm Frank Ahrens, economics blogger with the Washington Post. Make sure you read my blog, Economy Watch.